Uncovered why Tesla turned down $1 billion of funding from EU. I hope everyone who celebrated Thanksgiving yesterday had a wonderful day. Today, we have news on Tesla in Berlin, where the company has actually turned down some funding, which we'll discuss, as well as a slew of updates from Tesla in Shanghai, as well as news on Tesla in Canada, and a few other things. Let's start with the stock, which finished down about 3% in this short day of trading today to 1081.92. Hello everybody. Thank you for taking the time to check out our YouTube channel, and I'd like to welcome you back to Tesla Daily. This is where we discuss the latest news, rumors, and points of view. So let's get started. But first, if you haven't already done so, please subscribe to the channel so you don't miss out on any future Tesla material. I don't want to spend a lot of time on this because we don't have a lot of data yet, but that was driving concern today. And you can see that in various tickers, so COVID stocks as they've sort of become known, like Zoom or Pfizer and Modern, a very much up to date. Alright, I do want to quickly catch up on Elon Musk's stock. Looking at the total since then, and pending any other Form 4s that we might get tonight, Elon has sold about 9.2 million shares, which would be about 54 if his 10 is 17 million. Or up to 25 million, which would be about 37 of his total sale being completed. And there are still 14 million on exercise shares that have already been invested for the 2012 Performance Award. So we've got some pretty interesting news for Tesla in Berlin at the moment. And unfortunately, we've got some pretty interesting news for Tesla. But there's some news today about a potential incentive that Tesla had seemed eligible for in excess of 1 billion euros that we had previously discussed for building a battery factory in Berlin. But there are a number of reports today out of Germany from Der Spiegel and others that Tesla has actually declined that funding, which is a little surprising because it's not very often that companies turn down funding worth nearly €1.5 billion, which is also a little surprising because it's not very often that companies turn down, quote, the help for the project in Grünheide had been granted by the European Commission and was therefore presumably fully approved. But Tesla has waived this funding again for no obvious reason, and Tesla's plans seem to be unchanged. Building a cell manufacturing facility in Berlin appears to be moving forward, so it's a perplexing situation. Of course, we don't know the fine print of the funding, and maybe there's something in there that Tesla is hesitant to agree to or accept. And there has been some mixed reporting on this so far about whether this is entirely a Tesla decision or if it is something else. Some sites, such as Ars Technica, are reporting that this may be something else. So I don't really understand the logic here. And we had that quote from the European minister saying that this funding had been approved, which doesn't necessarily mean there weren't some strings attached that Tesla didn't want to accept. But I'm not sure it's as cut and dry as Ars Technica and others are portraying it here. I'm not saying that can't be true, but it does seem a little bit odd. I don't think it matters because Tesla has been producing 4680s at Cato Road for a long time. And yes, it's a pilot plant, but they also intend to ramp that pile of plants up to 10 gigawatt hours, which is still a fairly sizable battery manufacturing facility for Tesla's scale. So we've known these things for a long time, and Tesla has known them even longer than we have. So I don't see how the European Commission and Tesla could have gotten this far down the road without discussing any of those things, receiving approval and then Tesla being forced to decline that funding. So my intuition is that this was truly Tesla's decision to decline the funding, but my guess is that there were probably some attachments alongside the funding that Tesla just didn't want to commit to. The only other possibility is that Tesla just walked away. But honestly, I believe that will exist whether they accept it or not, especially given how much the EV tax credit will provide to Tesla in the United States if that goes through. So if you're going to be criticized for it anyway, might as well accept the funding. However, I could definitely see the other side of that argument as well. So again, Tesla has made no direct comment on this. Elon did, however, respond to a tweet on the subject, saying, quote, "It has always been Tesla's view that all subsidies should be eliminated, but that must include the massive subsidies for oil and gas. For some reason, governments don't want to do that." So no explicit reason given there may be alluding to the fact that Tesla doesn't want the subsidies, but since oil and gas subsidies haven't really changed, then why not accept a leveling of the playing field if that's what it takes? We just spoke about how this is only a few weeks of Tesla's operating cash flow, so if there were no limitations, it would be good to have, but not at the level that is crucial, alright? Next, we've got a few developments on Tesla in China. The first is that we have a story that Tesla is seeking to expand their Shanghai factory. They're looking to invest around $188 million in an expansion that would allow them to hire up to 4,000 more workers, a 35% increase in the workforce. If we believe that Tesla produces 750,000 or more vehicles per year in Shanghai, and that increased headcount corresponds to increased production, we could easily drive them above a million vehicle per year run rate. Obviously, that's a really simple assumption, but I believe it illustrates the idea well enough. On Twitter, China media outlet 42 was also covering the story, and they gave a bit of additional information in an excerpt from a different piece. In China, we've also got a few product improvements. First, Tesla appears to have shifted to Tesla Vision only and stopped producing radar in China. They've also changed the design studio to read more like the US design studio, with only 250 meters of Tesla Vision mentioned, instead of 160 meters of forward-facing radar. It's obviously speculative, but presumably that represents a change in the hardware as well, which should result in a significant cost decrease and increased margins from Shanghai. Tesla appears to be finally starting deliveries of the Made in China Model Y performance version. Previously, we'd seen photos of one at the factory, and now we're seeing one on a car carrier, with Kelvin Yang on Twitter reporting that deliveries have indeed begun. He also shared a screenshot that shows the listing of an AMD Ryzen being used as the graphics card in the Model Y performance, which would be different than what Tesla has been using in Model 3 in the mode. If that's the case, and if Tesla starts releasing products that can truly take advantage of those capabilities, we might see a retrofit for older vehicles in the future. The other product update that we have here comes from China, and I don't have a source on this one. That's just kind of popping it up on Twitter. But it's being reported that the Model Y in China is shipping with a lithium-ion 16-volt battery, rather than the lead-acid 12-volt battery that's been used in the past. Of course, this is also the case for the Model S and X, and if this moves over to the 3 and the Y, the offer then for Tesla in China is another round of pricing hikes. So this has been a pretty quick succession for the rear-wheel drive Model 3 and then the rear-wheel drive Model Y, both of which are experiencing a price increase of around 5,000 RMB, or approximately $750 crossing over to Canada. Tesla has also made some significant price changes there, most notably increasing the price of the rear-wheel drive Model 3 by almost 4,000 Canadian dollars, which pushes it above the federal EV rebate price threshold of 55,000. Tesla Canada claims that this now makes the consumer's cost of ownership about 12,000 Canadian dollars higher than it was just a few months ago. Tesla also increased the long-range and performance Model 3 prices by 2,000 Canadian dollars. This is on the Ravine, and they've informed their R1's reservation holders that their deliveries will be pushed back a little bit. Previously, first deliveries were expected in January 2022, but now the earliest communication has been marked to April 2022, with some reservation holders being told June to July. So somewhere between 3 and 6 month delay on the previous communication. Alright, so that's it for today. I hope you enjoyed the video. Thank you for listening. Make sure you're subscribed and signed up for notifications, and I'll see you for the next video of Tesla Daily. Thank you. Have a wonderful day.